Are you looking for a guaranteed investment?
Does such a thing even exist?
One that can earn you 5% or more?
Are you serious?
In today's video, we'll explore everything you need to know about GICs. If you're wondering whether you should park your money in GICs, make sure you watch this video till the end. What is a GIC? A GIC, or Guaranteed Investment Certificate, is a financial product offered by banks and credit unions. It provides a guaranteed rate of return over a specific period. Think of it as a savings account that locks in your money and you earn interest on it. You can choose to receive your interest periodically or at maturity. Some GICs even offer auto renewal options so your money keeps working for you. There are various types of GICs to consider. The most common type of GIC is a non-redeemable fixed-term GIC. This type will usually offer the most favorable interest rates that are locked in for a fixed period of time. Terms usually range from 90 days to 5 years, but they can be less or more depending on the provider. These typically cannot be cashed out until maturity, but if they can, there may be a penalty that may include the loss of all interest earned. If you might need to cash out early, the redeemable GIC can allow you to do this with less penalty, but may offer a lower interest rate. Other GICs include the GIC ladder, where the interest rate is fixed but changes every year on agreed upon term. The variable GIC, where the interest rate changes depending on the prime interest rate. Market linked GICs, where your original principal is protected and your returns are tied to the performance of the equities invested. And also US dollar GICs, which is just a GIC with US dollars. Once you decide on a type of GIC, you'll need to decide on the type of account. Your options include an RRSP, TFSA, FHSA, RIF, and a non-registered cash account. The account that makes sense for you will depend on your personal situation, so familiarize yourself with these accounts before choosing one. GIC income is taxed like regular income, but depending on the account you choose, your GIC income can be tax sheltered or tax deferred. Where can you buy GICs? You can purchase GICs from most financial institutions, including the major banks and credit unions. Compare providers based on the GIC type and the account type they offer, as well as interest rates and term lengths. For the best rates, check out highinterestsavings.ca and click GIC chart. Here you'll find the best 1 to 5 year GIC rates. My favorite banks on this list include EQ Bank, Tangerine, and Motive Financial. Interest rates on GICs are influenced by the Bank of Canada's interest rate policy. So when interest rates are rising, GIC rates and even saving account rates will increase too. Now the big question, should you invest in GICs? GICs are one of the safest ways to invest, ensuring your principal is protected. They are perfect for short-term goals, like if you're close to retirement, a down payment on a house, or a dream vacation within 1 to 5 years. They offer returns without putting your funds at risk. However, if you're uncertain about your time frame, it may not be a good idea to have your funds locked up. This is where a high-interest savings account makes more sense. GICs usually have higher rates of returns than savings accounts, but offer less liquidity, meaning it will be harder to withdraw and cash out. Now, if you have a long-term goal, GICs may not be the best choice. They may only keep up with inflation, meaning your buying power could decrease. For long-term goals, like 5 to 20 years away, consider the stock market. Yes, it's riskier, but with time on your side, it offers a greater potential for growth. But remember, GICs can still play a role in your investment portfolio. They provide diversification and balance for higher risk investments. Don't just sell off your entire investment portfolio for GICs just because of market fluctuations.
Sell.
Ultimately, investing in GICs depend on your financial goals, time horizon, and risk tolerance. Consider your needs carefully and remember that a well-balanced portfolio may include a mix of different investment options. If you want to learn how to invest in the stock market, check out one of the videos on the right of the screen. Thanks for watching. Until next time, keep making money moves. Peace!